let's take a look to today's technical reading. We cover what we call that regional credit subnet for today. So to highlight or to follow up what we has been highlighted previously, we expecting further consolidation. However, the index did not actually consolidate lower. In fact, there are buying interest actually emerged, particularly within this so-called immediate support, right within 10,000 region psychological level. So that what happened last week. We've seen a rebound, but the rebound was pretty much mild in terms of the reaction. I think the upside was capped largely due to the presence of the stronger resistance right at 10,300, which is initially our what we call that second resistance. If you look on the screen, there are plenty of the what we call that in resistance in shape of the Ishimoku cloud, and the timely rejection within the red line here represented by Kijun line indicate that the selling pressure remain or still pretty much perceived. I think in terms of the index weightage, the last weightage come from the Singapore stock, so you can expect Singapore market going to be more on the consolidation. Meanwhile, on Malaysian market, we've seen much more stronger reaction due to the rally for those two YTL and YTL power movement. But regardless, I think in terms of the FTSE Asian 40 index, we're expecting what we call that upside going to be kept within 10,300 and 10,450, and we're expecting the index to consolidate lower toward the psychological level of 10,000 again in the near term. All right. For this week, we highlight a pair of trading idea across the Asian region. Let's start with the first one. For Malaysia, we have EA Technique. EA Technique has been highlighted in Traders Almanac on the 6th March. The stock is actually gained about 34.8% to peak what we call that at 36.5 cents, one bit higher above our second target at 36 cents. So the subsequent pullback saw the stock is pretty much be a new baseline right along the 13-day moving average, and keeping the long-term bias remain pretty much intact. So what makes interesting is because we've seen an uptick on the what we call that RSI, how the RSI is actually holding out above this long-term average line, and the fresh uptick here give you indication that they're going an uptrend set to continue, backed by ongoing elevated momentum. Trading volume also I would say pretty decent. Meanwhile, the D trend stay pointed inside the positive territory. So because of that, we're expecting the stock to trade higher, and we put a new and higher target at 39.5 cents and 44.5 cents, while the stop loss also has been revised higher to 31.5 cents. In terms of risk to ratio, we risk about 10% to get potential upside of 27%. All right. The second stock will be Holding Limited. One of the reasons why we like the stock, because we've seen the long-term trend structure is about to shift upward. A recent recovery of the low since March has seen the stock building a new baseline above the 88-day moving average, which is the long-term what we call that parameter for the stock. So as the stock turned much more positive, we see a new high-low structure was created, and the stock about to complete a classic 1, 2, 3 pattern. And if you look on the RSI trend structure, it has also changed output, a breakout above long-term average line, has seen that it's consistently rebounding off the red line over here, indicating the overall momentum remain elevated. So a pickup in terms of trading volume as per last Friday on the back of uptick in both RSI and D10, suggesting the current upcycle is set to continue. We put our technical resistance at 164 cents, and the next one will be 180 cents, while the colors will be below 141 cents. Risk to reward ratio is about 7.5% downside risk and 17.65 upside potential. Based on Quant, we are using value with a Quant score of 6.00. For Indonesia, we like a Mayora Indah. Mayora Indah, the consolidation within support is quite critical at 2,270 Indonesian rupiah, and last week rebound set to kickstart a further upcycle, particularly as the stock flashing a bullish signal in MACD. The next resistance is actually paired at 12,850 Indonesian rupiah with the colors below 2270. And then we have Merdeka battery material, the consolidation within this cup handle pattern set to continue, set to end. Particularly last week decline was capped within a 50% Fibonacci level, as the stock completing a smaller of the wave 4 structure. We're expecting a new wave 5 to unfold, and that is actually kickstart a new upcycle eventually validating the cup handle pattern. The next target is actually pegged at 745 Indonesian rupiah, with the cut loss is actually below 530 rupiah. For Philippines, we like Aboy's Tis Power Corporation. The ongoing trend set to continue uptrend intact. We see number of price that try to reject within the 88-day moving average, but those lines continue to hold up quite well for the stock, particularly for the past few months. And last week, again, on the back of high trading volume, momentum turned much more positive. Lead trend also positive. We're expecting the upcycle continue to trade higher. So we put our next resistance at 43 and 40.2 Philippine peso and 43.9, with the cut loss below 34.5. And then we have Manila Electric Company. The condition within this triangle pattern set to act. Particularly, the stock has a strong gain last Friday. We're expecting the stock to trade higher, which possibly to take out the triangle pattern neckline, with the next target is actually at 399 and 431 Philippine peso, with a cut loss below 342 peso. For Singapore, we like Aztec Global. Aztec Global is actually our technical buy on 26 February. The stock has gained about 15%, but fell short to hit our first target. First target back at 1.02. The stock hit the high at 1.01 on 13 March. Regardless, despite this setback that occurred afterward on the minor correction, the stock is actually eventually rebounded off the 100-day moving average, staging a reversal move within 38.22 Fibonacci level. As we see a new high-low structure, we're expecting the ongoing uptrend to continue, given the momentum. Within our quant scoring using momentum side is also high at 9.02, 9.05. We're expecting uptrend trade higher as we reiterate our technical buy with a new higher target at 1.02 at 1.1 Sing dollar, with the colors also reversed higher at 0.865. And then we have French Can Group uptrend set to continue after the stock bouncing off the major resistance turn into the support level right within at 61 point Fibonacci level. So the stock also bouncing off this 100 days moving average while forming the hammer pattern last week. Hammer pattern combined another candle previous on Thursday, forming a harami pattern, a bullish harami pattern. So we like the idea where the RSI is actually dancing around the oversold territory, but yet to enter those territory. Instead, it is actually continue bouncing off those levels. Because of that, we expect momentum to start to picking up soon, and eventually, start a new upcycle for the stock. The next target kita target at 1.63 Sing dollar. The next target will be 1.74, with a cut loss below 1.37 Sing dollar. For Thailand, we like Beta Grow uptrend set to continue after the stock taking out the long-term downtrend line and rising above the 80-day moving average. The next resistance will be at 25 and 25 Thai baht and 0.25 cent, and the next target will be at 27.75 Thai baht, with the cut loss will be below 21.7. Then we have another one, WHA Corporation. The position within the current downtrend channel could actually ended following a reversal move within this double bottom pattern and the bullish divergence between the stock price against RSI. So as the buying interest has started building up, we think there's decent chance for the new upside to continue and set to challenge the immediate resistance at 5.25 and 5.75 Thai baht, with the colors below 4.52. Last for Vietnam will be Vietnam refrigeration electrical. We've seen what we call that the recent correction has ended after reversal move with 61 point Fibonacci. Last Friday gain has set up a new upcycle. The net resistance will be at 171,500 Vietnam dollar, with a cut loss below 57,700. Last but not least will be Phu Nguyen Jewelry, which is another Vietnam stock. Despite a sharp, what we call that pullback, the stock is actually rebounded off the 88-day moving average, keeping the long-term bias remain upward. We're expecting further recovery as we put technical resistance at 103 and 100,000 Vietnam dollar. The next target will be 110,300, while the color will be below 89,300 Vietnam dollar. What do you